following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 16th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check into the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. That's our number. Of course, you can contact us at 727-445-1044. That dime would be on you, of course. So let's go ahead and get this show. You can send me an email as well, right? Steve at TFNN.com. I'll try to get to those, as well as instant messages inside of the Tiger's Den. So let's go ahead and get this show started on, of course, wonderful Wednesday. And this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading down 84 points. She's trading out at 18,838. S&P off 7 at 2173. NASDAQ Composite up 12 points at 5287. Russell 2000 down about 2 points, trading out at 1300. Gold is up $1. Silver's up 8 cents. Light sweet crude is up 7 pennies. Natural gas is up 4 pennies. Lead the charger to the upside. You've got Google up $6. Target is up about $5.30. NVIDIA Corp up $5 and change. Maycom Technology Solutions up $3. Baidu's up about $3. To the downside, you've got Martin Marietta off $7.50. Viasat down $7. Goldman Sachs off $5. Mettler Toledo International off $5 as well. So what are the markets doing? Let's go start with intraday. What we should be intraday during the day. What we should be watching for. Now, let's start with the NQ out here. What do we have inside of the NQ, since that's leading the charge here to the upside? Here, in essence, is what we know. When it was making its high late last evening, moving higher, doing less relative energy, we saw a little bit of a retracement, right? That retracement that came in at 9:30 ran smack dab into that, not so invisible line, because you are one of my listeners out here. But if you take a look at that lunar phase there called perigee, that was at 47.40 1/4. That held. That's not the first test. That is the second test on a 30-minute chart that has held. That is a number you want to put down on a pad of paper for another 10, 11 days or so, 47.40.25. If that gives way, the NQ at this stage, because it's the leader to the upside, as we speak about today, then that would say curtains. Otherwise, we just have some shifting going on, some back and forth between the indices out here. If we take a look at the ES Mini right now, 2161.50 is a number you'd put on your pad of paper. Now, in the case of the NQ, where can price head to? Let's go finish that one off as we take a look at it. And to do that, I'm just going to switch over, take a look at the daily chart out here. So what we know about the daily NQ, we talked about this 2 days ago. When price was moving lower, the NQ was testing support, that TAS market profile low, 46.74.15. Never broke through it. Yesterday, made the run all the way to the upper boundary line, which happened to be the bottom of its weekly market profile, closed slightly above it. The profile being 47.63. Today has been a test and rejection of that level. This looks like what the NQ wants to do. As long as it can close above 47.8865, it's only about 5 points away from where it's at right now. But if this closes above this level, you're looking at 48.18 as its next move. If it can't bust above this area out here, and there's nothing at this stage on a 30-minute chart to suggest to you or I that it can't do that, but if it's unable to do so, and if it starts trading below Stevie's red line, again, a 30-minute chart we're looking at, 47.77 is the number right now, and then it's going to go back and revisit the weekly profile low that it was able to close above yesterday, and again, that number is 47.63. That's what you should be looking at. The ES Mini really can't get any higher. Not that it can't, but it hasn't been able to, and it's being blocked and tackled by that TAS weekly profile high. A little different than what we looked at inside the NQ. Yes, high as in the price point of 21.84 That was tagged last night. As that was tagged last night, or late yesterday afternoon, 7 o'clock, whatever you're going to look at. Of course, you know better than I do. What kind of tune was it singing? Yeah, it was Stevie Wonder singing in the key of G. You had that pattern going on. You had an A to B equals CD to the upside that was completing right at that level. So that is significant PS de resistance out there. You get above that, and that changes the tune. But right now, the tune inside of the ES Mini, inside of the S&P 500, is a chop to sideways to move lower inside of the markup. That is, in essence, what it wants to do out here. So we've got more moves to go to the downside. It doesn't have to happen right here at 1:12 in the afternoon. If it's going to happen today, if it's going to be any kind of significant move to the downside, what you will see is a close in the VIX index above 1450. We'll call it 1450 right now because that's the actual number. If we see a close above 1450, that number is going to change, unfortunately, but that's just the way that it is. And when I say change, not because I want to change it, just because that's the way the mathematical calculations work out. But if it closes above 1450, number one, the S&P 500 will definitely close. How can I say definitely? Pretty definitely, right? 95% probability definitely. How about that? Will close to the downside today. Things would not really get rocking and rolling. I don't know that they will if the VIX index were able to close above 15.25. So, not too far away from that 1450 level. Far enough away that I doubt that is what we're looking at today. So the markets are tired or overbought, short-term overbought out here, and they just simply need to do some backing and filling. Now, this could take several days. Doesn't have to all be done in one day. What I don't know is exactly the length of time that it will take. The Dow, really, if you take a look at the Dow, we got the signal that it was ready to do the backing and filling a couple of days ago. I think it was Friday. So today's Wednesday or Tuesday or Monday, and really all that the Dow has done, just to put it in perspective, is really trade sideways in essence since Friday out here. So, it's down 80 points, but it's really doing what it's supposed to do. It's as if it was a bad child, and it's not a bad child. And somebody said to it, hey, I'm going to give you a timeout. Now it's just doing some reflection, and getting ready, whatever you like to see, getting ready to run to higher prices, a lot higher prices. Right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off about 85 points, so no change since we opened up the show. And first question that has come in from Chris, and Chris is asking if I would be kind enough to go ahead and take a look at the New York Stock Exchange. So the answer is absolutely. So let's go see what kind of messages that we can get from the New York Stock Exchange out here. Let's start by taking a look at the Summation Index and the Advanced Decline Oscillator. So let's go, I got another chart we can take a look at. That actually will do just that too. Okay, it's right here. So here we're going to go ahead and take a look. We're going to take a look at a couple of different things with regard to the New York Stock Exchange. Now, the center panel of my screen out here, that is the Advanced Decline Oscillator reading. What you and I know is that when this little booger gets down to the minus 150 level, that's when we see bottoms form in the market. That's when we have and I'll use the definition, I'll use the term, not definition, I'll use the term oversold in the market. Just like when you get up to plus 150, it can be overbought. Now, getting above 150 has a different meaning than when you get below minus 150 out here. But let's not confuse things. When you are above zero, that's the red line. This is the center panel. When you're above zero, it is presumed that the buyers are the ones that are in control. Think of this as a football game. You know, you've got two teams. You've got buyers and sellers, bulls, bears, whatever terminology you want to go ahead and give to them. In this case here, the team that has the ball right now are buyers. So a pullback doesn't mean, it's sellers that have control. That's just as simply, the normal movement that you see inside of a market. Now, yesterday, by the way, yesterday was an amazing day for the New York Stock Exchange. So those of you that are NYSE aficionados and believe that this index is going to go ahead and give you a ton of information about the market, then if you're a bull, you should have been celebrating, high-fiving, and doing everything you possibly could, because it was almost as if it was sneaking in the back door out there. What do I mean by that? Huge volume breadth day inside of the New York Stock Exchange. Actually, the best single day that it's had since the big turnaround inside the markets a week ago today, right? Yeah, big volume breadth day out here. Now, in addition to that, we're not paying attention to today's move. What it was also doing is making new all-time 52-week highs. Now, the number of equities in this case here was 330. But here's the deal with regard to the New York Stock Exchange out here. You see, when the New York Stock Exchange tops, it doesn't make a higher high with regard to new 52-week highs being made. Many people just take a look at the New York Stock Exchange, just simply ignore that fact. You do not. And Chris, I know you do not either out here. So big volume, Brett. They not enough, unfortunately, and I do say unfortunately, because I believe that this market is tremendously bullish out here. There needs to be a pullback first. Okay, so let me make sure that we're clear on that. On a daily basis, there's got to be some moving back and forth, okay? Could be even more of a retracement, but then that sets up the next move to go higher, and we're talking majorly higher out here for quite some time to come. But inside the New York Stock Exchange, this panel down here at the bottom happens to be the Zweig, Marty Zweig thrust indicator out here. And you can see the big line from the day before through yesterday, a nice big move to the upside. It still has 2 days, and I don't think that it'll occur out here. It's just too much. Too many signals inside the Russell, the Dow, the S&P 500 that the market has to pull back. And so that'll make it very difficult for the NYSE as we speak right now to get above that blue line, which would give you a major bottoming signal out here. Doesn't mean that the market can't form a major bottom, but inside NYSE aficionado terminology, you certainly would like to have seen something like that. It's still in play, but it is doubtful that that will occur out here. So so at this stage with regard to the New York Stock Exchange, what is likely to occur out here, so everything looks good. Many people will say, hey, how about the divergence between the fact that the Dow is making new highs and the New York Stock Exchange is not. And I would say absolutely very perceptive comment out there with regard to that, because it is true. I cannot tell you that is not true. It is absolutely true, right? We know the Dow zoomed on the higher highs, but the New York Stock Exchange not so much. However, you know a good friend of yours, and he would say, not so fast. Maybe we ought to look underneath the covers of the New York Stock Exchange. And if we look underneath the covers of the New York Stock Exchange, the top panel being the New York Stock Exchange, the number you would be looking for is about 11,236, give or take, as a level that it would need to get up above to say, hey, this thing is making new highs and all is well in NYSE land. However, if you really take a look at the components, and you can rip apart the New York Stock Exchange more than just these two ways here, you can get rid of the closed-end funds that are within inside it, which really tend to have a real influence on logic that is out here. But if we're going to talk about the health of the U.S. market, that is panel number 2. And if we go back to its highs out here from back in May of 2015, you can see that it's already back up to that level. So with regard to the health of the top 100 companies that are inside the New York Stock Exchange, they're not the problem out here. The problem is the international companies. You know, New York Stock Exchange has got, 3,200 components, give or take, out there. It's got a ton of closed-end funds out there. And I'm telling you, if you don't pull that information out, you're going to get a lot of bad information. Bad information. I don't want you to have bad information out there. In fact, if you took out the closed-end funds out here, it's a manual calculation. It's a tedious, nasty calculation that has to be done. But if you took it out and you really looked at the New York Stock Exchange, you would see that all is actually hunky-dory out here. But this is the easier one because you can gain access to these symbols out here. You can take a look at what the top 100 funds are doing in the U.S., and you can see, oh, my goodness, we're already back to the highs. Doesn't seem to be a real problem here. A little bit of a problem in international land out here. So really with regard to the NYSE, all looks good. So, don't pay as much attention to that divergence that the indice itself is not making higher highs, go ahead and spend a little time, get underneath the covers, and you'll see that everything is okay. So I hope that assists you with regard to what the message of the New York Stock Exchange is giving us. One last message out here comes from this chart, this daily chart, where we're about to get a intersection. It may take another day or two. This little intersection where everything is going to come together, and then come together even with the NYC moving sideways or pulling back a bit or moving a bit higher. I mean, there's a number of ways for this to occur. Today is going to be 1, 2, 3, 4. Hard to say whether today's count is going to give us that TD 8 count setup like the other indices are, but whether it does or it doesn't, once that intersection comes together, then price is going to stall. And you may say, how do you know that? How do you know that? How can you say that, Steve-O? It's a pattern. And it's a pattern that if you know about, like I've taught all subscribers, and many of you as well out there, you know what to expect when you see that little convergence occurring out there. It's like operating your VCR or your remote control, really, right? And hitting the pause button. Believe it or not, the market has a pause button too. It's been hitting the Dow, hitting the S&P, and hit in the Russell 2000. Soon to be the New York Stock Exchange. Steve Rhodes, TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Haven't gotten the emails about gold, the miners, and so forth. So, but let's go ahead and it looks like that one chart out here what really needs to occur to suggest that there is a breakout that is underway. If we take a look at the XAU out here, in the case of the XAU, we've seen a nice little bounce off of the bottom from a couple of days ago, and where it has run into trouble, double trouble out here is Stevie's red line, that oscillator unchanged line. What that means is that, I don't know if I can actually show it here or not. Do I have it here? No, I don't have it there. I'll show it on a different chart. Now I have to switch over. At this stage here, let me do this. Let me do this. Let me do that. Give me a moment. Okay, now that we're done doing it, yeah. So, at this stage here, it is clear that inside the XAU, this is a daily chart that we're looking at, by the way, that, its price oscillator is still below zero. Now, a falling oscillator below zero, which is what we've had this for the last 4 days out here, is very bearish. So we're at a stage where the actual read from a daily chart perspective is that unless we see a close above 82.19 today, that says you can go ahead and move lower and actually make that seventh wave move to the downside. When this made a top out here back around August the 12th, it was moving higher, doing less relative energy. It was moving into wave number 7. So on the way down, you've got that same stretch pattern moving lower, doing less relative energy, and we've only made it to leg number 6 out here. So closing above 82.19, short-term bullish out here. That is a resistance. That is where, in essence, the snipers are sitting when we take a look at the XAU, which would really be the same thing if we took a look at the GDX. Now, that's using a daily chart. That's not taking a look at, some of the shorter-term time frames to get a feel as to what's going on. So hopefully that assists you with taking a look at the mining sector and the equities that are out there. I see I have a question here from Bill. Bill, thanks for writing in. Says, can I take a look at Bulletin Border, ACBFF? Let's take a look and see if we can even find ACBFF is the ticker symbol. Yeah, I get up Aurora Cannabis. And this is saying, let me see, do I have this right? ACBFF. ACB. Well, I've got it. So that's what we're gonna go with out here. So this is Aurora Cannabis Inc. Trading halt. Maybe. Yeah, trading halt. So I must have the wrong symbol here. So I can't look at that. Also, can I look at HD, Home Depot? So let's go take a look at that one for Mr. Bill out here, HD, and see what Home Depot is doing. So right now, trade out at 125.41. So let's go take a look at Home Depot, get a feel for what it is doing or any patterns that have completed out here. And we're starting right now today with a blank chart, although I want to give me a moment here to switch back over to a different set of worksheets out here so I can punch up on my other screen, HD, something that will populate some other patterns out here. Okay, so here's what we know about Home Depot. Here's what we know about it. And I'm first going to start with, as it was moving lower down here into this trading session from November 1st, let me see if I can do a wave count out here, see what we come up with on the count to the downside. Now, no, it's not singing in the key of G, but what it has been doing, so let's go take a look at that. I'm going to put up this other chart here first, just so you can more visually see what Home Depot is doing, Bill. Cancel this right there. It certainly was moving lower, doing it with less relative energy out here. Back on the trading day of November, well, it really began doing that pattern or performing that pattern back on October the 26th. Continued to push lower out here. The positive inside of Home Depot right now is the mere fact that prices above the red line, Stevie's red line, which is 124.29. So in the pullback of the last couple of days, because you write here, Bill, that can you look at HD, is it doing an A to B equals CD up is the question. We won't know for sure, Bill, until we see the actual B point get taken out. So if we're trying to identify, is this the C point of an A to B equals CD, the one positive that you would have going for you is that yesterday was a move down. We'll go take a look at volumes and so forth. And it was really a test of that oscillator and change line. I mean, it's still turned up. It's down below the zero level out here, but it's still turned up. Today, another test of that area, it's still turned up out there. So that is a possibility that the C point was in yesterday, a possibility. If we take a look at, and I assume that that is the A to B equals CD that you're talking about out here, this little shorter term one. And if so, now let's put on the market profiles. Let's go see what we've got here for support or resistance. That's not what I wanted. I wanted to put up this panel. There we go. Let's put on our TAS boxes. You've got a brand new daily profile, which it is trading above today. It is higher than the previous daily profile. Here's what I mean. I've now eliminated prices. See this blue line out here? This set of blue lines has formed above the prior set of blue lines. That is short-term bullish. And we can see that the center of the box out here is closer to the bottom of the box. This suggests that Home Depot ought to make its way to 130.64. That would be the read on it. Now, as it's making its way into 130.64 to support your A to B equals CD up idea, you certainly would like to see volume get above, well, let's actually get it so that we can read it together. You'd like to see it moving into that level with 11.4 million shares. Now, the level where you want to see that start occurring is when you get to the price point of 126.94. We're not there yet. And today's volume about 6.8 million shares, which really is not too bad, but it is not your 11.4 million share day out here. But yes, this could be an A to B equals CD to the upside out there. So watch the price point. If it sounds to me like maybe you're in this on the long side, watch what happens as price gets into that 130.74-ish type range out there. And that was for Bill. And thanks for writing in. Sorry I couldn't get that other stock, ACBFF. Just wasn't coming up on my system out there. Okay, that's all the emails that I see, but you're welcome to send an email as well. Or, of course, go ahead and post something into the den if you'd like me to go ahead and look at something. Would be happy to do that. Okay, so what are we going to go ahead and take a look at next? How about let's go look at light sweet crude. Let's go see what it is doing out here. And basically not doing anything. Nada, zilch, not too much. Had a lot of intraday activity, but if we take a look at where it opened, when the contract reopened back up last night, it was priced out at 45.77. You're trading at 45.71 right now. So not a whole lot. Well, what do we know about light sweet crude? We know a nice explosive move yesterday. There's no doubt about that. We also know that price ran right into that TAS market profile low. That is a key level of resistance that it needs to bust through. Can it bust through that level? Yeah, absolutely it can. Will it bust through that level? I don't know. Let's see what else we can find out about light sweet crude. See if I got anything else, have anything else that populates up on my screen out here. And the answer is, here is our fight with regard to black gold, Texas tea, and that is the fight between the bulls and the bears. This is the tug of war. You see Stevie's red line, 45.18? That's support. And we know resistance is the TAS market profile. So a pretty narrow range out here. If you're going to try to go long, do it at 45.18. If you're going to try to go short, do it at 46.23. Probably best to just remain neutral until either of those are taken out. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Danny in Atlanta would like to take a look at the yen, so we're going to go ahead and do that for him, for you, for everyone that wants to take a look at the yen. I'm first going to go ahead and find the yen futures. There we go, 6J. And as we take a look at it, give me un momento, por favor. So as we take a look at it, and many of us are watching this because we're watching this, taking a look at this in comparison to maybe a mining trade, in comparison to as an indicator for a trade in the Treasury notes, looking for a bottom. And what I can say here, Danny, in Atlanta, is that as things stand right now, it will or should form a TD13, a TD combo. Now, those can be areas where a change in trend take place. They're hard patterns to go ahead and complete, courtesy of Tom DeMarco out here. Really 3 counting systems, TD setup. Those are the black letters on my screen. You can see we are in setup day 7. Actually, today is going to make day 8. That is very clear. It's usually on day 9 where you would see a potential turn. And it looks like we're going to have both a tomorrow then. We could have both a TD9 setup and a TD combo. Both of those can be reversal areas. There is no bullish reversal signal on a daily chart as we speak just yet. But you might want to hold your breath out here because it does look like, those are the patterns that are setting up. Now, unfortunately, with regard to both of those patterns, unless you see some type of bullish reversal signal out here, you've got to get below Stevie's red line out there. And it's got a ways to go before that would happen. So you're really going to have to go take a look at the shorter term charts, 30-minute, 60-minute, 10-minute, things like that, and start looking for higher highs, higher lows, and so forth in order to maybe be able to call that a little bit earlier. But that's my take on the patterns that are associated as we speak right now with regard to the Japanese yen. You can see that the bonds, the 30-year bond out here is getting itchy. it's trying to pull its trigger. In fact, earlier today, for those of you that have an interest in it, it was earlier today, and unfortunately earlier doesn't count. It was, though, forming a hammer candle. Now, it can still do that today. This is the 30-year treasury we're talking about, but closing somewhere around 155-ish out here. If it can do that, a pretty good chance that it would actually form a hammer candle out here. Now, that hammer candle would come, as you can see, at the end of about a 1 to 1.618, A to B equals CD to the upside out here. Right now, just simply is a doji. It's flat. Does it mean anything? Look, it means it's tired, but dojis really don't have a tremendous amount of meaning down at the bottom of a pattern, not like they do up at the top of a pattern. But it does the interpretation is it's a market that is tired. So it is providing us with some important information out there. So that is on the 30-year treasury. That is on the yen. I hope that assists you with what you were looking at out there. But if it's something else that you see, please let us know. We would love to hear that. Okay, no other questions that are in just yet. So that says it must be time to go take a look at some of these individual equities that are moving out here. And let's start with what's moving to the upside. Let's go take a look at Google. Let's do the GOOG out here routine. And that A to B equals CD. That is not in play. As we take a look at it, here in essence is what we know. Google came back to a level where it broke out with 3.8 million shares, and it came back with 3.6 million shares. So in the case of Google, let's go ahead and get rid of, not because we just want to get rid of it, but we're going to go ahead and clean up our chart and take the information that is very useful to us. And there's a lot of useful information, but this is the most useful information, which is we know that a breakout occurs when you have a gap to the upside, a breakdown when you have a gap to the downside. A wide-ranging bar is a breakout. A wide-ranging bar with volume is breakout. A gap up with volume is a breakout. Well, in essence, that's what you had inside of Google on July 29th. Now, when we take a look at breakout areas, those of us that like these windows, these gaps, you like to see price come down, test it, and hold it. It did not do that on the trading day a few days ago, right, on the 14th out here. But still, if it was a wide-ranging bar, we'd say, support, really, if we're going to draw a support level, is going to be right here. I would use this trading day of July 26. Why? Because, it's a couple bars back. It's light on volume. It's a swing point, a little junior swing point, and you can see that's at 734.27, which held out here. So this is the expression, right? If you can't bust them down, you'll try to bust them up. That is the message inside of Google, right? So there's a lot of questions, are the FANG stocks dead or dead meat out here? And the answer is, in the case of Google, couldn't bust them down, going to try to go bust them up. Where does bust them up take you to? You'd have to say 788.82 out there. And speaking of FANG, let's go through it. I haven't looked at this, so we're going to do this together out here. Facebook. We take a look at Facebook. If we're looking for that same kind of breakout, we're nowhere near that area as we speak right now, because here was the breakout, right? You saw that. It's right here on this trading day of April 28th, 87 million shares, right? That level was tested all the way back here with 36 million shares on June 27th. Talk about a nice signal out here, right? So this had already held once. There is now inside of FB, Facebook, there is an A to B equals CD to the downside. I don't know if it's confirmed or not, but let's go take a look at it, and then we'll see if it was really confirmed. And that means with volume as a B point was being accelerated through, that B point being November 4th that had 30 million shares, and price closed below it with 32 million shares, with 51 million shares. So yeah, Facebook easily could go make a run all the way back to that breakout area. Once again, one more time, that would be the 108.89 level. What would change our reading on the ticker symbol FB Facebook? And that would be if we see where it is in relationship to its oscillator unchanged line out here. Not until it gets above that, which is priced right now at about 120. 120.60 something or so out here. This looks like Facebook wants to continue lower. Difference in Google. FAN, A being the Amazon. Let's go take a look at the Amazon forest out here, see what it is doing. AMZN. It's really a jungle, is it not? I don't think they call it the Amazon forest. And if we take a look at it, did I have Amazon up, not Facebook? I think I might have. Was I really that foolish? Did I really do that? Let me see. No, they both have the same pattern. Didn't it look to you like it was the exact same gosh darn thing out here? So if we look at Amazon, it too looks like it wants to head a bit lower, at least a bit lower. And that would take you down into about 701, 674 out here just to complete its Gartley buy pattern. Has not completed that as we speak just yet. No bullish reversal signal. So we got the Facebook, we've got Amazon, Netflix. That's the other one. NFLX of the four. Get a feel for what it is doing. Actually, Netflix looks pretty strong. Now, unfortunately, it's kind of like in the middle here of this gap. So in the middle of this breakout, and it was a breakout. It was a breakout party, 42 million shares to the upside out here. In the case of Netflix, NFLX, can I do it before this break? Can I? 121.69 is the level it's got to get above to get back to bullish. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 70 points right now. S&P is off 5. I'll be filling in for Tom during the first hour today. It won't be a repeat of this show, and what we will do, we'll certainly take all the phone calls and emails and things of that sort during. But what I will focus on during at least the opening or the beginning of that show is long term where the markets are going and why. So I will lay out for you the chart patterns inside the markets, where things are going, and the reasons why. That show is broadcast on the radio out there, and I figure a lot of listeners are really more longer-term oriented with regard to their 401k. So you are both trading as well as managing your longer-term fund. So it's always good to step back and take a look at what is the longer-term picture here. At least what are the markets communicating to you and I as we speak right now, which is important. And if they communicate something to us different tomorrow, then we go ahead and we change what that view is. Otherwise, I want to make sure that we all have my interpretation of the charts that I'm reading. You can, and I'll show you the patterns, and you just simply can go ahead and make up your mind with regard to whether or not that is an accurate read. So that'll be coming up at 3 o'clock today. We took a look at some equities moving to the upside. Let's go ahead and finish off the show. Take a look at some things moving to the downside. Martin Marietta leading the charge out here, but really not a big deal, right? Martin Marietta having broken out with big volume, 3.8 million shares out here a week ago, right? November the 9th. Now we're just seeing a retracement. The retracement is on light volume, so not a big deal there. Where's Martin Marietta going to pull back to? Could pull all the way back to the breakout. It'll pull back to the breakout area, which is about the 202-ish range, 196 range. It'll pull back all that way if it can close below 216.60. 216.60 is the first level of support. MLM, not multi-level marketing, but instead Martin Marietta Materials out there. How about Viasat, VSAT? That's trading off 8.5%, down $6. This has gapped down with volume, but this thing is probably in a consolidation pattern because this thing broke upside, topside, moved higher back on November the 9th with volume. Now, today's volume is a little bit higher than that, a bit higher, 964 to the upside. Today so far, 992 to the downside out here. Don't know how to make heads or tails of this chart other than that. Could find support at 72.04, so watch that area. If it gets below that, you're going to get all the way back to the lows from November 3rd, around 68.45 or so. VSAT being the ticker symbol. What else is going on out here? Hey, let's take a look at Regeneron Pharmaceutical. Goldman Sachs. Let's look at Goldman Sachs, GS. How did the presidential predictor work? Is a question from Danny in Atlanta. Danny, you might remember when the markets made the September 9th move to the downside, that predictor indicated that Trump would win the election. And then when the markets made a bottom on October 13th, there was a low on October 13th. That indicator said that Trump would win the election. And then after that, we had the indicators give us false readings both way. And so at that stage, the reading was, you know what, the market was a little bit confused. And probably because it was tuned in to the boob tube out there. Hey, if ever you and I could say that tube is a boob tube, and you know what I mean out there, that is it. So they worked originally, but they didn't follow through, Danny, which made it something to think about pattern out here. But the nice thing is, Danny, is that we're not really concerned about the election, just as nobody on the boob tube should be either. That's over and done with. We're concerned with what's the next move in the market and the reasons why. So at 3 o'clock, how about you and I, we go take a look at that because it looks awfully rosy. Not rosy, but awfully rosy. Folks, stay tuned. David White will be up next. Have a wonderful Wednesday. We'll see you in an hour or so, or perhaps tomorrow afternoon. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.